very crucial report. Remember, once again, let me reiterate that the RBI governor just recently stated that the Q4FY23 outlook might be even 7% as far as the GDP numbers are concerned. So all eyes on that very, very crucial data coming in tomorrow. But moving on for now, May has certainly seen a dramatic turnaround as far as the markets are concerned. Both the benchmark indices today hit a 5-month high, broader markets too enjoying new milestones. But what is the road ahead and which way the markets will swing from here? To talk about all this and more, we're now joined by Manish Singh, who's the Chief Investment Officer, Crossbridge Capital, joining in right now. Thank you very much, Manish, for joining us here on ET Now this evening.
My pleasure.
So, Manish, what I want to understand from you is that the Indian stock markets just made a stunning comeback as the 5th largest ecosystem in the world, stock market ecosystem in the world. And then we had Chris Wood yesterday on ET Now saying that the Sensex can definitely surpass the 1 lakh mark in the next 5 years. And now it seems Nifty is just days away from its all-time highs. Where's this value emerging? And if you could speak about the sectors that will drive growth.
Oh, hi, good evening. It's definitely, 5 years is a long time. So, you can have any forecast numbers on that. But let's look at the trend and how it is evolving. If you look at the first global market in the sense that, are we close to the peak of interest rate? I believe we are. And even though the Fed is not going to probably cut rates soon, if you look at the expectation, in March, the expectation was there'll be 4 rate cuts. Now that has gone down to 1 rate cut. But let's not forget, we started the year with no rate cuts. So I think that it can go anywhere given where expectations are. That's number one. The second, the key thing that is going for India, and I believe this is a significant one, is India able to trade energy in its own currency, right? So if we can continue to buy things in Indian rupee, strength of dollar, how to fund the deficit has been a big problem for India in the past. So if you look at the non-energy deficit that India has, it's probably around 50 billion. FX reserves that India has, per RBI latest numbers, 560 billion euros or thereabouts. So if India continues to buy energy in its own currency, then the FX reserves that we have currently in India are sufficient to fund 10 years of deficit. Now, that's a massive game changer. Now, the other side of the equation is that, yes, Russia is left with Indian rupee, which it doesn't know what to do. But that's Russia's problem. If India can continue to trade energy in non-US dollar, then India can use the FX reserves it has for other sort of investments and things to do. And it also means that you will have the long-term rates coming down on bond yield. It reduces the cost of capital. Those are all a massive boost to Indian economy, Indian currency, Indian bond market. And these things are going to propel India forward.
So these things will propel India forward. But coming back to specifically Nifty, Nifty breached the 18,500 levels, almost close to all-time highs, 18,887 Nifty Auto, Bank, FMCG, all indices hitting fresh highs. What I want to understand is the 20,000 mark achievable?
I think it's all about time horizon. So yes, the short answer is yes. It'll depend on how quickly that can be achieved. But the global factors will always remain a key. So if we look at what happened to NVIDIA stock on the back of AI boom or AI anticipated boom that the world has. Now, if we are at a point in history where something new is developing and that leads to years and decades of growth, which India can latch onto, and they will be in a good position to latch onto any of these things that happens, because not just domestically the consumption is going to rise, but everything else seems to be falling in place. Then yes, I think that the short answer is that it can be achieved. However, as I say all the time to my clients, is that patience is very important. It's very easy to jump on a bandwagon too quickly and not to see the risk involved, or to jump off it too quickly and stake your losses. So if you have a disciplined approach to investment, then that's going to help you. And yes, Nifty 20K and over is definitely on the horizon.
When you speak of following an approach to investment, what is it that you would advise investors? And take us through some of the sectors that will particularly do well. Infra could be a big bet as well, considering that we're just months, away from the next big general election in India.
Agree with that. So I don't do single stocks, but I do more macro. So if I look at from that point of view, if you rightly point out infrastructure is very important. What else is important if you compare the developed market and emerging market and look at the sector that dominates, I think financials will be another one to look at. With the growing savings, growing investment, growing capital market, financials will do well. Infra will do well clearly because there's a need for infra development, and so industrial stocks are going to do well. And the third one, which I think is often the case everywhere, emerging or developed market, are all the consumer stocks. Because as your per capita spending increases and the spending power keeps on growing, the consumer stocks will be direct beneficiary of that. But if you want to take a less risk-driven approach, I mean, I'm a great believer in index-based approach where you're not getting into picking the winners and ending up with losers in your basket. So a disciplined approach, we talked about Nifty just now. If you're going to be happy for Nifty to be at 20,000 when it's 14.5 now, you might as well buy the Nifty index and you will get there. So I think a disciplined approach is required, but consumer stocks, financial stocks, infra stocks, those things are going to do well as the growth accelerates.
All right, Manish. So you say that a disciplined approach is required and Nifty can very well touch the 20,000 mark super soon. On that note, thank you very much for joining us on ET Now this evening. But moving on to the other big